Hello traders, Gary Wagner for Trending Markets just before 11 o'clock in Honolulu, 5 o'clock in New York. Equities markets have been closed for roughly an hour, and we had kind of a mixed message in the equities markets, with the Dow Jones Industrial Average eking out a small gain on the day, about 13 points or 0.08%. in terms of the net gain. However, we had the NASDAQ index come down off about 0.75%, closing off 32 points at 4279, and the Standard & Poor's S&P 500 closing off about 12 points, or trading off about 12 points, off about a little more than 0.5% at 1962. Now, the real question that we need to ask ourselves at this point, we have a couple of key levels. And the key level, of course, that many traders are waiting to see if we can breach over the next couple of days is this 2,000, because the 2,000 really would signal a return to a bullish rally mode. However, as you know, we have been talking about the fact that it was our belief, and still is our belief, that this market should provide some sort of bottom anywhere between, I believed, the beginning to the mid part of October. Now, when we look at our chart here, this of course is a daily chart of the Standard & Poor's 500. We can actually see that this bottom, if this bottom holds, of course, in fact came in at the end of September, not at the beginning of October. And my sense is that we were looking in terms of cycles for a specific point in which we felt comfortable. Now, we've met the first of the two criteria that we need to see for a long-term sustained rally in the marketplace. The first criteria, of course, is going to be a higher low. We certainly got that. And now we need to take out this particular price point. We're very, very close to the real bodies, meaning at around 1980, 1982 in terms of the S&P 500. That's where these real bodies come into play, right in here. And once we take these particular price points out, I don't think we'll have as much problems taking out that 2,000. And I think that once that is taken out, I think we will see this rally, of course, sustain and take us to new highs. Now, I do not believe that it will be in one swoop, so to speak. And let's go ahead and compress this so I can give you a little clearer of what I'm really looking at. We will see this in cycles or in waves. So we had our first wave, and this is considered or counted as a fourth wave with an A, our B, and our C. We've got 1, 2, we'll get a 3, which should have some sort of a higher low again, and then at that point we'll come in and take out, I believe, this area of 2,000. So that in terms of positioning yourselves into this trade in equities, I believe that if we find a little bit of weakness here, we want to plot whether it is a 38%, a 50% retracement, but the different retracement levels of this rally so that we can position ourselves at some point here. Of course, if we get a break above this particular price point, as I said, around 1985, you can buy the breakout, and I would buy it in two tiers. The first tier I would buy would be a break above this particular price point, and then a solid break above 2,000. In other words, if we don't see it backing off here, I would add a leg or additional positions right in here. And so that is my recommendation of how you want to play this particular market at this particular point. Now, the other market that I have been extremely bullish on and have been under the belief that we would see the market move higher has been crude oil. Crude oil finally popped, and popped in a substantial way today. And the reason I'm saying it's substantial is we identified some real resistance, these series of tops right in here that came in around 48. Well, traders, we had a solid break above that, and we can begin to enter in long positions in crude oil you're going to want to place your stops below this area right in here, call it 47, 46. Remember, this market has a dynamic range, so $1.50 stop per barrel simply won't cut the mustard when you get 5%, 6% moves like we're seeing today, where we're seeing this market move almost $3, over $2.50 to the plus side. So the two markets that we have been looking at, and hopefully you've been taking advantage of, have been the Standard & Poor's from the long side. I believe that we still have opportunities there for those that have not placed any kind of positions in that market. As I said, you might want to see if we're going to get any kind of backfill in this area, or if we're going to see it simply go and take out the particular price points we're looking at 1980 and then again at 2000. Again, with oil, as I said, a break above 48 would absolutely signal a time to enter it from the long side. Traders, you can place long positions in the market, but you do want to keep your stop at least under today's low, which is 45.55. That would be my recommendation for trending markets. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.